when I launched it, it was me. I had this little Peli case that was about this big. You'd get 2 mics in there, 2 mic stands, a Zoom H6, which we don't have. Actually, no, it was little handheld stands, wasn't it? Those weighted ones. And I would fly, do the interview, go to the hotel, edit it. But I was so shit at editing, I knew how to do half of it in GarageBand and half in Final Cut, so I had to go between the two.
It's more than I know how to do.
Yeah.
So.
And then I would publish it all. And then I would get up the next day, go somewhere else, and it was like that. And then Danny wrote to me and said, I'll take over the production for you. And then we got Ben on board. Ben became, he did the publishing and then the editing. Then Emma came on board to organize us all. And then we got Neil, a researcher in. We got Austin on our partnerships, and now Connor as a support and production. It's one of these things that grows. But you're used to bigger productions, man.
This is bigger than. I mean, we have setups similar to this in our offices in Bloomberg, but like this full-fledged video and this, for the most part, it's reserved for certain special things. But obviously, TV is a whole different animal. But this is not a little different. But now you've got what, 3 or 4 massive Pelicates?
Yeah. Well, that's come down.
It has come down, yeah.
Yeah, so our last camera guy used to come, 8 cases, 9 cases?
Yeah. Oh my God. We've got much more efficient.
It used to take about like half a day to set up. And then Danny just was like, no, this is wrong. So Danny, we got all new equipment and he can set up, about an hour?
Yeah, well, that was a race, but I got it done in an hour the other day.
Yeah, so it's quicker, better. And anyway, good to see you again, James. I realized we'd met before.
Yeah, we met briefly for like 2 minutes at Bitcoin. I introduced myself as like one of the Bloomberg ETF guys you referenced on your podcast a couple of times. That's me.
So what do you do up at Bloomberg?
So I'm a ETF research analyst, but really we cover the entire asset management industry. So anybody that manages money, really, we write about that, primarily focused on ETFs. I used to cover commodities and cryptos. So I helped bring our commodities crypto analyst, who's actually based in Miami now. So I was working with him and I was personally involved in cryptos. And he was like, we're going to start covering it. Like, what do you know? And I just went from 0 to 100 with him. So naturally, anything that goes over that overlap of asset management, crypto is like squarely in my wheelhouse of expertise. And GBTC obviously fits right there.
You know my audience, right?
Oh yeah, I know your audience. I listen to a lot of your podcasts. You're one of my very few select podcasts. I listen to most episodes.
Thank you, man. I appreciate that. Well, you're swearing a lot at the moment to my audience. They're not going to like the word cryptos.
Yeah, I know. But I have to say crypto because I obviously separate crypto and Bitcoin from my personal perspective. But in Bloomberg, it's crypto. It's all crypto for the most part. Right. And I know for a fact that Bitcoin is not crypto as far as you're concerned. And
got to separate that.
I'm good with that. Yeah,
got to separate that. Well, listen, it's good to see you again. You came highly recommended by a mutual friend as well. Steve McClurg is a very good friend of mine. Actually, we're seeing him tonight.
Yeah.
Yeah, a very good friend of mine. Love that guy. And he is like, you got to get James on the show. You got to get James on the show.
Yeah, they just filed for an Ethereum futures ETF, Valkyrie. I don't know if you know that. They just filed yesterday or a few days ago.
God damn it, Steve, you shit corner. I'm going to have a chat with him about that tonight. No, yeah. I didn't know he'd filed that.
Yeah, so basically related to all this, Grayscale, they filed for 3 ETFs, a privacy ETF, which is going to invest in Zcash, BS, all this stuff, and then a Bitcoin composite ETF, which is like, I kind of think it's a middle finger to the SEC for them not allowing GBTC to convert because they're basically saying, we're going to invest 40% in international spot Bitcoin ETFs and then 60% in Bitcoin miners. And I think it like gets under most of the SEC rules. They can still deny it and force them to withdraw it. But like they're just saying like, here's spot Bitcoin ETFs that exist everywhere else in the world. We're going to invest in those and then allow US investors get access to them. That's what they're trying to do.
So they're trying to basically create a spot ETF by basketing international spot ETFs, Bitcoin ETFs, and lumping in some miners in for a little bit of leverage.
Yeah, exactly. Yeah. So
cool product.
Yeah. And then they also filed for an Ethereum futures ETF. And then we've seen like literally 5 or 6 issuers in the last week file for an Ethereum futures ETF. It's all related to this big GBTC situation because it's all a fight with the SEC.
Yeah. Well, there's a lot we can get into, man.
We could sit here for 3 hours and probably not cover everything. So,
well, we will do our best. Let's see what we can get through. Okay. So to set it for you right now, me and Danny were talking about this beforehand. A couple of years ago, if you asked me about Bitcoin ETF, I'd be like, yeah, let's have it. Let's bring it. Yeah, definitely bring it. It's not even that I'm ambivalent to it. I kind of think they are ultimately bad for Bitcoin. Ultimately bad. And we'll come to that. But I think it's mainly because I've seen so many situations over the last year, 2 years, where if people had just bought and self-custody Bitcoin, they would have their Bitcoin. One of my sponsors, BlockFi, went to shit.
I have money in BlockFi tied
Yeah.
up in the. So I basically, for reference, I put a little bit of money in a ton of different platforms
Right.
just to so I know how everything's working. So I have money tied up in the Genesis and Gemini bankruptcy and in the
Right.
BlockFi. Not a lot, but enough to know what's going on. So I left it in there, and I was like, okay, this is going to shit. So can I curse on here?
Yeah.
Yeah.
You say what the
Okay.
fuck you
Yeah.
want.
So it's going to shit. So I was like, I'm going to keep this in here so I get all the notices. So I actually have like Bloomberg news reporters who would be like, did you get any notices recently? And I'll be like, yeah. And I forward them what I've gotten. But part of it is Bloomberg initially, when we first started covering this, cryptos, Bitcoin, it was not considered anything. It was like, you can do whatever you want with them. So I had regular recurring buys like a lot of people do. And then obviously in 2020-ish, Bloomberg was like, all right, now if you're going to cover it, I can't buy or sell it. So like, I'm not allowed to do anything with it. So I kind of just have to let it sit where it is.
Yeah, I think. Well, I've definitely got something in BlockFi. So because I get the notices as well, but I didn't realize I had something in BlockFi, which is
You
weird.
might just get them because you're a customer, though, or you were a customer.
No, I'm pretty sure the notices said
Okay.
I have something, but maybe you're right. But anyway, look, they went to shit. A lot of things have gone to shit. GBTC is kind of gone to shit, though.
I would take kind of out of there. It's gone to shit.
Yeah, well, it's gone, but it's not gone to shit via like a rug pull.
No, correct.
It's gone to shit out of choice because there's a benefit to DCG. My view is there's a benefit to DCG because of the fees. I mean, I saw the Brad Sherman letter. They could do redemptions. They just don't want to do it because they offer redemptions.
So there's a lot of nuance there. So this is a good point to start. So that Brad Sherman letter,
Yeah.
there were 2 points in there that I thought were fantastic, which I hate saying because this guy is a quack. But we can get into that another time. But there were 2 points in there that he did a really good job questioning. The Reg M question, which I know David Bailey on your podcast recently kind of made it seem like it was unquestionable. They can just offer redemptions without offering, while they're not offering subscriptions. And it's just easy to get it, which like me, I'm not a lawyer, obviously preface everything I've said there, but I talk to a lot of SEC lawyers that launch ETFs, lawyers that work with the 1940 Act, the 1933 Act. They're not Reg M experts per se. But like they've all said, no, not a single person said to me it's cut and dry. They can just offer redemptions.
Explain what Reg M is so people know.
So Regulation M is basically it's to try to prevent it's anti-manipulative practices, right? They don't want people basically offering redemptions and subscriptions at the same time on illiquid stuff because then the people behind it could just like mark it up or mark it down as they're doing redemptions and creations and manipulate the underlying market of different things. So it's basically to prevent any sort of manipulative practices. With Bitcoin, it's almost irrelevant to me because there's a spot market. You can see what the prices it trades, but that's not basically how it's seen as law. So for this conversation, GBTC has to comply with Reg M. And they got a cease and desist letter in 2016 or 2014, basically because they were operating redemptions and subscriptions at the same time. The one thing that I think is missing that I've talked to some lawyers and no one will give me a straight answer. I've asked multiple people at Grayscale and basically all I've gotten out of them is they've heard from their lawyers they cannot operate a redemption program. And I think I found there's rule 102 in Reg M. So like I read through this rule, which I don't know if you've read through any regulatory documents or anything with the US government, but it is, and lawyer speak, it's hard to read. But like there's one area where I'm pretty sure is why GBTC cannot offer redemptions right now. And it's because it trades on an interdealer quotation system, or dumb speak for, it trades OTC, it trades over the counter, and there's dealers that hold things and they trade it. And basically, the rule is you can't operate redemption subscriptions at the same time, and it can't be trading on an interdealer quotation system. So basically, I think what would have to happen in order to operate redemptions without just liquidating outright, which obviously I don't even think anyone really wants, because if you just liquidate outright, assuming you could get the Bitcoin to everyone, that might be better, but there's a potential they would have to sell a huge chunk of the Bitcoin just to give people their cash back, which you don't want that much selling pressure. But essentially, they would have to delist from the OTC, which I don't fully know that process, and then maybe they could offer redemptions as far as I'm concerned. But again, I'm not a lawyer. That's just my understanding. But what I will say is like getting Reg M relief. That's what it is. You're applying to the SEC to get relief from Regulation M so that you can operate a redemption program. And if you've seen or read anything Gary Gensler and the SEC have said on crypto or Bitcoin, like it's not as clear as here, we're applying for a Reg M, give us exemption. It's I don't believe Gary Gensler is going to do that. Like maybe he will. And Sherman had sent that letter. I mean, today is Tuesday. He was supposed to. He asked Gary to give him a response by today. I haven't seen anything that he's responded to yet. But I'm interested to see what he says. So there's a lot of people asking these questions. The one thing I get from every lawyer I talk to is it's not cut and dry. This is a new situation. Like no one really is certain. It's probably going to need to figure it out in the courts potentially.
Which is great for DCG because they can continue to take their 2%, really 4% fee for the time being. Which, but yeah, so that shit show, all of it has just made me realize like the thing we should be promoting is buying and owning self-custody in Bitcoin as much as possible. That said, we have a market. ETFs exist. I can't do anything about people applying for ETFs, and when they arrive, people will use these ETFs. So, like, we'll work our way through it. But I just wanted you to have the context that I've come to a position that I think smoking is bad for people, but I can't stop it. I think ETFs are bad for Bitcoin. I can't stop it. But anyone who's not doesn't fully understand what an ETF, just explain what it is, why they.
Let me first give you a counter to your point because I've talked with a lot of Bitcoiners about this, and the one thing I would say is people are used to using the current system. I view the ETF as a bridge between the current system and the Bitcoin ecosystem or crypto ecosystem, whatever you want to say. But the one way to think about it is in the US, just the US alone, registered investment advisors, the people who advise on money, have 25 trillion-ish in assets. I mean, those people would much prefer. Now there are systems being created where people can do direct custody, but for the most part, those RAAs, they're people much older than us, both of us. And they are just used to doing things the way they want to do things. And plenty of them out there want to give their clients exposure to crypto, to Bitcoin, what have you, some basket of maybe cryptocurrencies, whatever it may have you. If just 1% of that money is able to go into something that's clean, cheap, efficient, we know is secured stably somewhere, like that is a good thing. And also a lot of people, if they want access to it, it's kind of like dipping your toe in the water. Like once you go into an ETF, it's like the first step kind of thing. Just like buying on exchange, and then you go to do a custody, self-custody and cold storage, what have you. And the other part of it is like RAAs, they want it into their wheelhouse, right? So usually they charge on the AUM. So if you are an investment advisor and your client has $10 million and you want to put $100,000 into Bitcoin for them or 50,000, whatever it may be, you'd much rather have that under your umbrella that you can charge those fees on. So part of that is not great for at the end of the day, but it's also an incentive for RAs to use it, and it will help. The ETF will help do that.
Yeah, I guess it comes down to personal opinion on what you see Bitcoin as, what do you think the role of Bitcoin is in the world, where do you think it's going? I think if you come from a position that you want uncensorable money, you want to have something which is a check and balance on government, which allows people to send money anywhere in the world, censorship resistant, peer-to-peer, trustless. If you've lost trust in the government and you've lost trust in the dollar, the pound, the yen, the euro, which I think a lot of people have, and you see this as the fight back, then I think an ETF isn't something that you see directly helping. I think if you're somebody who sees it as an investment class and you want the price to moon, then I can see why an ETF is useful. The only way I think the two bridge in that argument is that if you do have an ETF, you've essentially legitimized it even more, and you've put a product into the market which traditional people can use, and then I think you put the government in a more difficult position if it wants to continue with Operation kind of choke point stuff. Then again, you are potentially creating big pools of Bitcoin that can be confiscated. So there's a lot of nuance to it. I just at the moment I'm falling on that.
So this it's
Would you
funny.
say not care or just?
Um,
But where are you at?
I think it's great if you only care about number go up, but if you want like ground up global adoption, it's probably not. It's going to price people out quicker. I don't know.
Nobody's ever priced out.
Yeah, you de minimis.
Yeah, but I mean, if you're hoping that you want bottom up adoption, it makes it harder, or it makes people accumulate less.
Yeah, I think. Correct me if I'm wrong, but I think what Danny's trying to say is that Bitcoin is a great redistribution of income. Like brilliant for Michael Saylor, MicroStrategy if that's successful. But if he gets lots of other companies on board, you're pushing the gains. You're pushing the early gains to the richest people. We want to push the most gains to the people near the bottom. We want them to have the opportunity. And so we've kind of seen this bottom-up approach work well. You know, if the US chokes Bitcoin in
They're
the
trying
US,
to. It seems like they are.
But
at least certain parts of the US government are.
But if they do that within the US and smaller countries in South America continue to adopt it, or people in Africa continue to adopt it, or other countries in the world, like poorer and more developing nations, continue to adopt it, what you do is that if there's an inevitability to Bitcoin, you've closed the nation to nation wealth gap, and then if we can get it in the hands of normies, we've essentially closed the wealth gap there. Sorry, 1 second. Okay, it's a glass table. We'll just carry on anyway. So I just think I've wrestled with it a lot. I've gone from bring the ETF, let's moon this shit, to I'm not sure. But anyway,
it's funny. Gold bugs had a similar situation with ETFs when people they don't like the fact that they're stored in vaults and like you're not physically holding your own gold. It's kind of a similar situation to cold storage in Bitcoin.
Okay, so anyway, position set. Let's explain what an ETF is, so people.
Yeah, you've talked about ETFs a lot, and most people have gotten pretty good. But I feel like there's like a base understanding that wasn't fully set in most of your podcasts. So if we start from square one, they were invented by a guy named Nate Most. And you've actually talked about this recently in one of your podcasts. Somebody talked about like receipts. So you would give money to like a warehouse, and then you could use those receipts to say, I own X, Y, or Z. And they were called commodities warehouses, but he used that logic. So essentially, if you had, 10 bars of silver or a bunch of bushels of grain, whatever, you would give it to the warehouse and they would give you a piece of paper that says, we confirm you have this is the receipt. And if you ever want, you can go to the warehouse and take that commodity out. That's the basis for how an ETF is supposed to work. That piece of paper is worth whatever that commodity is. But he did it to more than just commodities. The first one was the S&P 500 ETF. Well, the first ETF was actually in Canada, but it was based off of what was being designed in the US. Anyway, what it really does is it takes those pieces of paper, and if you think of those pieces of paper of a commodity warehouse that I was just talking about, those are essentially the shares of the ETF. And there's custodians that hold the underlying assets. So if it's equity, say that you would make an index of 10 stocks. The way an ETF works is there's a mechanism where you can create and redeem shares of the ETF because those 10 stocks are equivalent to some number of shares. So for every 10 stocks I hand, I can get, we'll say 10 shares of an ETF. So at all times, those 10 stocks, I can trade them in for 10 shares of the ETF, or I can trade in 10 shares of the ETF for 10 shares of the stock. So the way it actually works is it's like 100,000 shares of the ETF and 500 stocks in some proportion for the S&P 500 or whatever the ETF is. But the whole thing is really, I can do an in-kind transaction, which the big benefit is that that's a taxless situation because you're just doing in-kind. You're giving shares for shares, and there's no taxable event that occurs. So that's one of the big reasons why ETFs are so efficient. So if we ever spot Bitcoin ETF, the way it would work is you would hand in Bitcoin and you would get some number of shares in return, and that is it's not a taxable event right now. So that's a huge advantage versus what the way usual funds work is I give you money, that fund goes to buy something, and then I try to return, they have to sell something. Those are both taxable events that have to occur. So the way an ETF works, the reason why it works so well is because of that creation redemption process in that in-kind transaction. The first type of fund was what's called like a closed-end fund, and that's more similar to what GBTC is right now. So a closed-end fund is like, I'm going to start a company, and instead of doing something like Apple and making electronics, I'm going to invest in other companies. So you have an IPO, and then you invest in bonds or stocks or what have you. The problem with that is there's no mechanism to say the underlying has to be worth X or Y, because we know what the underlying is worth. So the shares of this company have to be worth whatever that is, because that's all that's involved. Right? But there's no mechanism to arbitrage that out. It's the same way a company works. A company, its price will fluctuate wildly, but its actual value is indeterminable for the most part. Like, you can kind of figure out what it is. But like for a closed-end fund, like say it holds those 10 stocks, right? And we know what those 10 stocks are trading at, but the closed-end fund doesn't have to be trading at that price, right? With an ETF, it's a technology. It's a wrapper. It's advanced technology to get efficient exposure to anything. No matter what happens with an ETF, when it goes into a market, it democratizes everything. Prices come down to hold it. Prices come down to trade it. It's a very good technology in the asset management space. But the reason it works is because of that mechanism I spoke about. Those shares are always going to be equivalent to the underlying because you can always exchange them. If all of a sudden those shares are worth $10 more than the underlying stocks, I'm going to give you the underlying stocks and take the shares back, or vice versa, because there's an arbitrage mechanism there, right? So like at any point, if it gets too out of whack, somebody's going to come in and basically say, all right, fine, if this is worth $10 more, I'm going to create more shares, give you the stocks, and I'll take the ETF, or vice versa if it's worth $10 less, which is what GBTC is missing, right? You can't hand in the shares and get Bitcoin in return, because if you could, you would be sitting really nice right now. That's the whole problem. So ETFs allow for that. It's called NAV, net asset value, is what the underlying value of the holdings are worth. And then the price is the share price. With an ETF, the NAV and the price are almost always going to be very close in line. There are instances where that doesn't happen, and usually it's problems in the underlying market, which we don't need to get into. But for the most part, that creation redemption mechanism, like my boss likes to call it the flux capacitor. Like that's how everything actually works in the ETF world. It's a non-taxable event, and it makes sure that NAV and price are always in line. Now, normally it's not people like, oh, this is deviated a little bit, I'm going to go hand in the shares and do this. Mostly it's just part of day-to-day trading. There's people trading, there's authorized participants. There's people out there just making markets in the ETF, and it keeps things in line. But there are times where if things get really out of whack, somebody will come in and be like, there's an opportunity here to make, 3 basis points. And if I can do that on $1 million, that's a decent amount of money in one trade.
Okay, so they're basically super efficient markets.
Yeah, so like the way to think about it is like a stock, right? You have a fixed supply of shares for the most part. Obviously, companies issue and buy back shares, whatever. But like demand is what drives the price, right? As demand goes up, the price is going to go up because the supply is fixed, right? With an ETF, when demand goes up or goes down, you can change the supply. So you are moving the supply, not you, but the market itself and authorized participants, market makers, Wall Street, if you will, are making sure that supply is always in line with demand. So if you just think about it as 2 bars, basically it's just the market constantly moving that supply bar up and down to keep in line so that NAV and price are the same, which again is what's missing from GBTC.
And you can also create some quite exotic products with them. Baskets of, you could, like I say, I want to invest, say, in Bitcoin miners, public Bitcoin miners. To save me having to go out to every single miner and buy shares, you could just create a basket of all public Bitcoin miners. You can hedge yourself. If you think, right, I think certainly Bitcoin miners are going to be super successful over the next 5 years. I don't want to have to pick a winner. I don't want to have to spend time studying each of them, but I know the market's definitely going to grow. Someone can create an ETF for that.
Yeah, there's a bunch of ETFs out there that do that. And honestly, it's not even that they have to be super successful. There's plenty of ETFs out there on things that people expect to fail. And basically they'll use it. So ETFs were initially invented to be trading vehicles. So like people can short them, you can buy options on them, you can do anything you want on the underlying market, which we can get into.
Is there anything you can't put into an ETF?
There's some nuances. Basically, there needs to be an underlying liquid market. So the way an ETF works is like if you think about it when you're trying to see how much does it trade. So if you're an institution, you care how much it trades. For an ETF, it's not as critical as much how much it trades, because if the underlying trades enough, like I said, you can always exchange those shares. So a market maker, somebody who's making markets in these ETFs, if the underlying market, if it's an ETF, it only trades 100 shares a day, but its underlying stocks that it holds are the S&P 500. A market maker can arb that all day. They can give you 1 million shares in a second without any issue, because the underlying market is what makes the ETF liquid. So there are instances where the ETF becomes more liquid than the underlying. We call those pseudo future ETFs. They're like just super high powered trading vehicles. Most of them have been around since like 2000 or earlier. But for the most part, the real liquidity, we call it the primary liquidity, is like the secondary layer, what is held in that basket. And you can hold bonds, commodities, ETFs, futures, derivatives, and they've made rules over the past few years to make it easier to do these things.
And can you have ETFs which back up like a basket of multiple ETFs?
Yes, you can. Yeah. So there are ETFs. So like iShares, for example, has a bunch of ETFs where they'll hold their underlying ETF and then do a currency hedge on it. So like say you want, I don't know, UK exposure, but you want to hedge the British pound exposure. So they'll hold their UK ETF and then they'll offer a hedged UK version where it just literally holds the ETF. And then there's also a bunch of issuers where they're like, all right, we're going to actively manage our ETFs and rotate through these different sectors, what have you. You can do a lot of it's a technology. It's a wrapper. That's the way to think about it.
Just quickly going back 1 second. In the Michael Sonashine interview, we asked that if he allowed with that redemptions, would it bring the discount back to par? And he said he didn't think it would necessarily. Is that just wrong?
The problem is, like, my big thing is, like, if we just allow redemptions, we don't allow subscriptions, GBTC's broken in the opposite direction, which is basically what happened. Like, should we just get into the history of GBTC?
Well, let me ask one more question before we get into that then.
Okay.
Do you remember the Cullen Roche interview?
Yeah, but
Cullen's great.
Cullen is great. So remember he talked about his investment thesis is, he was like, I'm like a third equities, a third gold.
He has an ETF.
I was going to say,
does this. There's an ETF that does this.
I was going to say, you kind of want a hard assets ETF, which is a bit gold, a bit Bitcoin.
I assume they exist today, apart from with Bitcoin.
They do.
Bitcoin. You want one with Bitcoin in as well. So like, that thing where I want a little bit of gold just in case, and that I feel like if there was a hard assets ETF, I would be interested in that.
Yeah. So right now, the only way to do that would be just with Bitcoin futures, which isn't really what most people really want.
And sorry, before we get into the history of the GBTC thing, can anyone invest in ETFs, or does it have to
anyone? It's just like buying a stock. So if it's an ETF, for the most part, you can just go onto your whatever brokerage trading platform and you can just type in the ticker and buy it.
Okay, interesting. Do you trade them? Are you allowed to trade
I'm not allowed to. I hold them in my portfolio. Ironically, like so I work in Bloomberg Intelligence, which is Bloomberg's research arm. So in my department, for the most part, they're sell-side researchers, buy-side researchers. They write research on the street for the most part, and they came to Bloomberg, and now they do the same thing. But it's not buy or sell-side research. If you have a Bloomberg terminal, you have access to everyone in my department's work. Ironically, if you cover like healthcare or automobiles or whatever it may be, like for the most part, you just have to worry about names in your sector to get requests to buy, but you can just buy any ETF you want because ETFs are exempt from everything for the most part, except for me, because I cover ETFs. So no matter what I buy, I have to get approval or I can't buy it.
But you can buy things outside of ETFs.
I have to get approval, but yes, yeah.
Huh. Annoying.
Yeah.
All right, let's get into the history of GBTC then.
Yeah. So GBTC was like the first way you could get access on the traditional financial rails, right? I think 2015 is when it launched.
I think that's about right.
So it launched as it basically launched as a hedge fund. So the only way to get access still, even if you wanted to create shares back when it was open for creations, was a private placement, which basically it's like a PE fund, hedge fund. It's a private vehicle. You have to be an accredited investor or qualified purchaser to create shares to buy in, just like a hedge fund. So we call them AIQP. AI, you have to have like 1 million investable assets outside of your home. QP is 5 million, or make $200,000 for the past 2 years. But those have been the rules for like ever, and they haven't changed with inflation, which is good in my opinion. I think some of the AIQP rules are dumb because they don't let people get access to certain things. But
yeah, I mean, they seem to be arbitrarily unfair.
Yes. Yeah. It's like if you're rich, you can invest in these things. But to be fair, those funds that are in there, they're not subject to, we'll get into 1940 Act, 1933 Act. They're not subject to all the stuff that Gary Gensler wants Bitcoin and crypto and these crypto exchanges to be subject to, right? There's a lot of disclosure and agreements. So the hedge funds kind of operate and they're not allowed to market. They're not allowed to do these things. But that's the way GBTC was initially launched. So first it launches that. It's just a private trust. I actually added it to the Bloomberg terminal when it launched as a hedge fund. So basically, I say hedge fund. It was always a grantor trust, but I'm just referring to it as that because you had to have a private placement. It's called like the document for it's called a PPM, private placement memorandum. So you invest in that. That's how you go in. You have to be an ARQP. For the most part, people were hand delivering them Bitcoin and getting shares of GBTC in return. And then they listed it on the OTC, the over-the-counter markets, under Rule 144. So basically, that's when GBTC started trading, and it was trading at a couple 100% premium, 100 some odd percent premium. And the way it worked initially, which people in your podcasts have gotten into, you put in, say, I give them 10 Bitcoin, I get the equivalent amount of GBTC back, and I'm locked up for 12 months, right? So I sit there for 12 months, I'm locked up, I can't do anything. And after 12 months, then I get my shares to my brokerage account and I can do what I want with them. I can hold them, I can sell them. But if you were handing in 10 Bitcoin and you waited 12 months and then Bitcoin has gone up and GBTC is trading at 120% premium, 100% premium. So if Bitcoin's $10,000, you're selling your GBTC at an equivalent of $20,000 back in 2017 or 2016 before like anything really crazy happened. So that's what people were doing. So a lot of the demand came from people handing Bitcoin over, getting GBTC shares, and trying to take advantage of that premium, right? So they were going in, and what I think David Bailey kind of missed is, like, I work at Bloomberg, so most of our clients are high net worth or work in institutions or they deal with this stuff. The people I talked to that were doing this, it was a lot of PE funds, a lot of hedge funds. Like, they saw that premium and they were like, I'm going to arbit. So people went in there, they put in billions of dollars. Like, I know a lot of clients who were doing this, and like, they don't care about Bitcoin. They don't care about crypto. They saw this ARB opportunity and they were pouring money in. And honestly, it was at the disadvantage of retail investors, because the only way a retail investor could get access to GBTC was buying it on the exchange at that 100% premium, 70% premium, whatever it was. You had to buy it at a premium. So people who were accredited investors, institutions, were able to put their Bitcoin in. A lot of them then shorted Bitcoin in the futures market or whatever avenue they had. So they were basically only long that premium. So all of a sudden, once their shares unlock, they get out of the short, they buy Bitcoin, and then they sell GBTC. So
great trade.
Yeah. So people made a ton of money until it unwound. And in ETHE, which I know isn't what we're here to talk about, but that was a perfect example. The one step I did miss is these products become SEC reporting companies. Grayscale did this on purpose and also from the get-go, since I started covering them, their stated goal was to launch crypto Bitcoin ETFs. Like, that's what they wanted to do. Like, from the very get-go, this was the process. And the reason they launched it as a grantor trust, so I talk about those gold ETFs, all those gold ETFs, their underlying structure, the legal structure behind them, they're also grantor trust. It's not just like a misconception that they launched these things as grantor trust. They launched them because it's a tried and true accepted measure to have an underlying structure of grantor trust to launch an ETF that holds some physical assets. And I'm putting physical in quotes for those just listening on audio.
Okay, fine. Do you think any of this is the reason why the Bitcoin price ended up becoming correlated so much with traditional markets?
That's a complex question. Part of it, maybe. I think more. I'm in agreement with the mostly consensus that a lot of people that were buying Bitcoin were also huge tech investors or in the tech world. So like a lot of the correlation was really to the tech area. Like, if you look at the Dow, which holds a lot of industrial type stuff, like the correlation isn't as strong. And also the correlation is broke down. Also, like in markets where there's tons of money printing, like any assets, risk assets, which I know most people in the Bitcoin world don't consider Bitcoin a risk asset, but
of course it fucking is.
Okay, it's a risk asset. So when it's risk on, all risk on assets tend to go up at the same time.
Yeah, I mean, look, the people who are saying it's not a risk asset are talking narrative because they say, well, the dollar's a risk, but it's a risk asset.
Yeah. Well, I mean, it's like one Bitcoin is always one Bitcoin, but it trades like a risk asset for sure.
Yeah, exactly. But I did want to talk about ETHE for a good example. So that's Grayscale's Ethereum one, which shitcoin, if you want to call it that. Right. So I wrote about this. So like when you become an SEC reporting company, you can lower that 12-month lockup to 6-month lockup. And ETHE was a mess. So in December of 2020, I wrote about, so basically what happened is everyone's creating shares. And I can see the flows. I can see the shares increasing on a daily basis for these products. I know what's happening. What happened is when ETHE became an SEC reporting company, they filed, the SEC allowed it. And then there's this time period where everyone who had filed from 6 months ago to 12 months ago, all that became unlocked at the same time. So like if you look at ETHE and the Ethereum price, and I'm convinced of this, I wrote a note, I can pull up my Twitter thread basically saying like, this is a massive unlocking of ETH shares, and it's going to send the premium, which was around 100% of ETHE, down cratering. And like, I can't tell you how many, anytime, even back in 2017, when I was tweeting about GBTC, how the premium was going to collapse, FUD, don't know what you're talking about, suit, all these things. And I'm like, just know what you're investing in. Like this thing is trading at a massive premium, and people would comment and they'd be like, it's only going to go up. We're going to see a 300% premium here. But yeah, ETHE back in December 2020, basically what happened is it changed from 12-month lockup to 6-month lockup. So anyone beyond who created shares before 6 months ago at that time got their shares like on the same day. And what happened is all those people, so I actually had clients who read my report and were like, oh God, I got to get my shares out. And they got lucky because they were short Ethereum and long ETHE because it was 100% premium, because that was the arb trade. It wasn't just the GBTC one. That was the biggest. But what happened is everyone was unlocking their short ETH at the same time. So ETH went through the roof. If you look at the price of ETH from into 2020 into January 2021, I'm convinced that was the main reason, because people were getting out of their short positions, which means you have to buy ETH, and they were getting rid of their ETHE. So a lot of people who were on that arb trade got rocked. I had multiple clients who actually reached out to me and said they saved like a ton of money by getting out after reading my piece, because the trade went against you in two directions, which is the same thing that happened with GBTC when GBTC started going into a discount.
Right. So what do you make of the whole GBTC situation? How much can you actually talk about? Can you be completely open with your opinions? Are you
Yeah,
limited?
I can be completely open with my opinions.
Okay, so you listened to my interview with Sunshine.
Yeah.
What do you think?
I thought you were a tad harsh, but he also should have admitted that Genesis like screwed up by putting all their money with 3 Arrows, and like they obviously Genesis screwed up. But again, his opinion is like, I don't deal with them, which obviously he does in some way, but it really wasn't in his purview. And the other thing is like,
he was the signatory.
Yeah.
On the loans.
Yeah. So there's some culpability there, and he should have said he feels bad for like everyone there, but like that's as far as I would say I guess I would go. But like,
where do you think I was harsh?
Be honest.
Yeah.
I listened to it when it launched, which was a month ago.
I mean, I guess I called him a liar.
Yeah. So so the problem is like, I don't know, like the main thing. So with ETFs, when I cover ETFs, everything's out in the open. It's fully transparent. I can see every document. I can see daily holdings. I can see shares. With this DCG, Genesis, Grayscale situation, like I don't have any special information. Like I don't know exactly what the relationship was. I can't see what money was moving. I have to wait for the quarterly filings, what have you, which we can get into about what happened. But like, I don't know. And obviously Grayscale, everyone should be pissed. I bought GBTC in 2016, I think, in my IRA, because it was the only way at the time to get access to it. Now I'm not allowed to trade it, like I said, but like I still hold it, and I'm not happy with what's going on here. So I'm a little biased, maybe not as biased as David Bailey is, or biased as Sunshine. But I said this before we started recording. I probably sit somewhere in the middle of the two of them that when you've covered this topic.
So what do you think is going to happen with them? And do you believe they genuinely want an ETF?
So I do believe they genuinely want an ETF.
But do you think they want an ETF but hope it's maybe in 2-3 years?
Maybe. I don't. So obviously this is where they're getting most of their cash right now, right?
I mean, what is
I
it?
think you should explain that for people that didn't listen to the David Bailey one, why they might not want to be.
So look, what's in the trust? How much is in there? How much Bitcoin?
600 some odd thousand, over 3% of the supply.
Okay. And they're making 400-ish million based on the current price.
No, it's a little, something like that. I mean, back in, it doesn't matter, but somewhere around there. They're making a lot of money.
400 million is a good revenue line for a company that probably employs not a lot of people. And so 400 million is great. What a great revenue line. Now, if Bitcoin, we did an interview yesterday with, do you know Rational Root, the carrot on Twitter?
No, I don't.
Brilliant. Jim, he has these brilliant charts. So he has this one chart. I'm going to try and draw it for you. But basically, you have the issuance. No, this is your liquid supply of Bitcoin, right?
Mm-hmm.
And then you have your issuance rate. Okay. So this is your illiquid supply. This is your Bitcoin that people got locked up and stuff. This is your trading supply. And what happens with each halving?
Yeah, it goes down.
It goes down.
Step function.
But the amount that's actually being held locked up is growing at a slower rate than the issuance. But we hit what was the inflection point, which was last halving.
Yeah.
And so they're kind of growing about the same, but with the next halving, and so what this essentially becomes your S curve. So you get to this point here over the next kind of 2 halvings where the liquid tradable supply is a lot lower.
Yeah.
So over the next 4-8 years, if there's a growing interest in Bitcoin and a growing adoption, an increasing illiquid supply and a shrinking liquid supply, there's only one thing that can happen to the price of Bitcoin. So if Bitcoin goes to 100K, that 400 million a year becomes 1.2 billion. If it goes to 200K, it becomes 2.5 billion.
Yeah.
So you just have to rationally ask, if you look at the money they would make in the ETF versus what they make in the trust, where are they going to make most of their money? So sure, maybe they want an ETF. But at the moment, there's billions of reasons why they don't want it to happen.
So there's a few things I would say. One, my biggest criticism for them is I thought they should have lowered the fee. Once you get to economies of scale, I think they should have lowered the fee. That said, no court is going to make them lower the fee. Like if you look over in Europe, the first ETNs are still trading. They charge 2.5%. There's a bunch of ETFs that charge 2%. Like they're not like, it's not like they're off out of left field. That said, there are Bitcoin futures ETFs in the US that are trading 79 basis points and lower. Basis points is 0.01% basically. So less than 1% fee. But fees add up over time. Like they really eat into your return. But obviously they're saying they're using it. Their defenses are going to use it to fight the SEC, and they really are fighting the SEC. And I think they're going to win their lawsuit against the SEC for an APA violation.
Okay, let's get into that. What's an APA violation?
So basically, it says Administrative Procedures Act, and basically it says any government entity, regulator, or whatever has to treat like situations alike. I'm dumbing it down, but like Bitcoin futures ETFs, spot Bitcoin ETFs, and basically Grayscale's argument is you're allowing Bitcoin futures ETFs, but your reasoning makes no sense. Like you can't do one without the other, which I've been saying since they've been denying spot and approving futures, because like the futures market and the spot market are inextricably linked. Like they go hand in hand. You can't have one without the other. Anyone who knows anything about derivatives markets knows that's how it works. So the idea that like you can manipulate spot and it wouldn't affect futures or vice versa, like is just insane to me. So I listened to the hearing. We thought that they had one judge in their hands, Grayscale, I'm saying. So I have a crew of people I work with on this. So we have people who cover exchange companies that cover crypto. We have people who do whatever on that side. I have people covering cryptos as a commodity. I have a crypto analyst who covers a lot of the on-chain metrics, who's based in Australia, actually. And then we have a litigation analyst he used to be a lawyer and he covers this stuff. So he's covered the Ripple lawsuit, he's covering this lawsuit. And initially going in, we were like, all right, they got this one judge who's a Democrat leaning and like he's likely going to be on their side. There's this other judge that they could possibly get, and this third judge that there's probably no way they're going to get. And listening to the hearing, which you can't base everything off of that. It's just their line of questioning. But like we went from his view was like Grayscale has a 40% chance, which everyone I was talking to was like, this is a frivolous lawsuit. It's going to get thrown out. Grayscale has a powerhouse litigation team behind them filing this lawsuit. This is not like some like nobody doing this, right? Which I think he mentioned on his podcast. But
how brave he was.
I mean, yeah, that was a little strong. But I suing your regulator is a big step. Like you got to, like they are an asset manager. They have to deal with the SEC no matter what they do going forward. So going out and suing them in federal court is definitely like, there's a give and take that usually happens with these regulators. So like going out and suing them in federal court isn't like the smartest business move, but they're kind of out of moves in my opinion. I forgot where I was going with that.
The judges.
Oh, the judges. So we listened to it, and then the second judge came in and it was just hammering the SEC lawyer. Like, and we were like, okay, well, they got two. They're probably going to win this now. Like within like the first 15 minutes, I was live tweeting it. Actually, I was like, this is crazy.
Is the 3 judges total?
It's a 3-judge panel. And then the third judge came in and that we thought was no shot, started asking hard questions of the SEC that like were in line with our thinking. So we were like, okay, The downside is, our base case, so he's flipped from 40% chance Grayscale win to 70% chance of Grayscale win after that, or the oral arguments, as they're called, which we should get sometime. It could happen before June, the end of June, but likely 2Q, 3Q, and we should get the Ripple case, which is irrelevant to you. But yeah, I kind of view it as a security. But at this point, any wins against the SEC, I'm all for.
Oh, listen, I can hate Ripple and XRP and want them to beat the SEC at the same time.
Yeah, exactly. Yeah, that's where I sit right now for the most part.
Apart from Hester Peirce, we like Hester.
Yeah, Hester's great.
Yeah,
she is awesome. It's really Gary. It's mostly Gary Gensler, to be very clear.
Yeah, I want Hester to get Gary's job.
Yeah. But so now it's like we think 70% chance. The problem here is that the SEC, not the SEC, the judges might issue a ruling that says, like, you violated the APA, like you did not treat like situations alike, and then say, go back to the drawing board. And then the SEC could then just deny for other reasons, right? Which I think is my base case of what's likely going to happen. So Grayscale might win the case and then still not be able to convert to an ETF.
Why do you think the SEC is doing this?
Gary.
And why do you think Gary's doing this?
Gary wants more power.
But what actual power is this? Is this post SEC job?
I'll give you a little background on Gensler.
He's a shitcoiner himself. What was he promoting?
I don't know.
So when he was at the CFTC, I've talked to people. He was like a crypto evangelical person to the SEC back in the day.
Well,
so
he was really excited when he came in because of the talks he did was at MIT,
including me. Yeah. I listened to hours of his classes to all right, this guy. I learned stuff from him about how some blockchain works.
And the CFTC always seemed a bit more open to this. I mean, Brian Quintenz was great. Who was the other guy? The
Giancarlo?
Yeah, Giancarlo.
Yeah.
I've got this great photo of me. I went to the CFTC to interview Brian. I've got a great photo of me in front of the big plaque. It's me, Brian Quintenz. What's his name? Giancarlo in a Motorhead shirt in front of it. I've got to show you it.
That's awesome.
But they were, when I met both of them, they're brilliant.
Yeah.
They're totally pro Bitcoin.
Yeah. It's funny. You talk, so like, this is going to get a little off topic, but I was shocked. So like anyone who's talked with the SEC, most of the I don't want to say the underlings, but the people you don't see giving press conferences, like when you talk to them, they know what's going on. Like people on Twitter were like, oh, the SEC doesn't understand this. And then like, I had calls with them. Like we had calls about ETFs and we're like, can we ask about what's going on with Bitcoin? And obviously have a conversation, and like, they know what's going on. They're not completely oblivious. It's mostly coming right now. It's coming from top down from Gary, and Gary wants to be Secretary of Treasury. That's his ultimate goal, and he's basically tied himself in with the left wing of the Democratic Party. Think Elizabeth Warren types. So he needs them to be on his side if he ever wants to be Treasury Secretary. So he's tied in with them now.
Has he actually said he wants to be Treasury Secretary?
It's an open secret, but but I've heard from more than enough people that know him that that's his ultimate goal.
What happens when Trump wins the next election?
Well, it's funny. He was actually, I think he was the CFO of Hillary Clinton's campaign for 2016, and he was in line to become Treasury Secretary. Like if Clinton won, he was probably going to be Treasury Secretary, and we wouldn't have him as chairman of the SEC right now. So that he lost there, and then he went to MIT, and now he's back and he's chairman of the SEC.
See, this is where it's absolute fucking bullshit. Because this is, it's just basic career. He's putting his entire career above what is best for the people of America.
He would disagree with you, but
of course he will.
Yeah.
Of course he will. But you've seen the MIT classes. We have. He was everyone used to talk about Gary Gensler's bags. Gary Gensler's bags to the moon. And yet right now, he doesn't seem to be doing much. It's almost like he's trying to just delay. He's delaying his tactic.
What he's doing. He's regulating through enforcement rather than regulating through like dialogue with the market, which is you'll hear from everyone. And what he wants to do is get more power at the SEC. That's what he did at the CFTC when he was chairman of the CFTC. So this is fun fact: they weren't unionized until he became the chairman of the CFTC. So the people who work at the CFTC unionized underneath him because of how hard he was working them. So he's doing the same thing to people at the SEC. There's people leaving the SEC left and right because of him. He's hard to work for, basically, is the gist I've gotten from anyone I've spoken to.
And what kind of checks and balances are in for somebody in that role?
It's the courts, which he's going to the courts to do. So basically, one of his tactics is, you'll see this. He'll put out he'll put out these applications or like notes for comment on like what he wants to do, rule changes, what have you. And he'll often put like one or two things in there that are just like absurd and has everyone up in arms. But really there's like a third or fourth thing in there that also is a little bit extenuous. But then he comes back later on after dialogues and comments and it's like, we're taking this out. And then everyone kind of forgets about this other thing that he slipped in there in some different way. So he's a textbook politician. Like he's a politician through and through. Like that is what this guy is. So he does a lot of different things like that.
He's a fucking snake, man. Okay. So, and just so people understand the US political structure here. So he is a part of the Biden administration in that role. If Trump was to win the next election, all those roles, the heads of all those institutions changes, right?
Theoretically, yeah, he could ask for them to like. So I'm not an expert on this. I don't know 100%, but I believe that's correct. And he could keep them on, or he could ask them to resign, essentially, and then put somebody else in their place.
Yeah, I'm pretty sure when I was the SEC, I actually saw the Hester Peirce thing in her office where it was her being appointed by Donald Trump. I'm pretty sure. I think that's what it is. That goes back to that Michael Lewis Fifth Wrist thing where you bring in.
Yes,
they bring in
exactly.
They bring in their own team. Okay, so Gensler's basically playing power games that stopping all this. Okay, so just say they lose the lawsuit, and if the judges are tough enough, they might be forced to allow it?
Theoretically, or what could happen, which is a fringe case, which has been discussed on it's been discussed on Twitter and through different people. The main thing that this hinges on is you allowed futures ETF, because the one thing that the SEC continually says they want, I think like the last denial of the GBTC, there was like 88 references to the term surveillance sharing agreements. Like they want NYSE to have surveillance sharing agreements with, or New York Stock Exchange or NASDAQ, wherever it lists, with an underlying exchange, a couple exchanges, a market of significant size. So like think, Binance, Gemini, Coinbase, like surveillance sharing agreements. So every single microsecond of trade that they can see to like look for manipulation. That's what the SEC wants. So then they can go to NYSE, who's regulated with them, and see it. Or they want those underlying exchanges to come on board and become exchanges themselves so that they're also regulated. So it's either surveillance sharing agreements, give us all your data, or come in and become fully regulated with the SEC. So basically they approve futures ETFs because the CME, where the Bitcoin futures trade, is a regulated market. So the SEC was like, all right, this is regulated. I'm going to toot my own horn a little bit here. We got shit on when we said that these were going to get approved. We stuck our necks out in August because basically in late July, Gary gave a speech, and like a couple lines in the speech, he was like, we look forward to 1940 Act applications of Bitcoin futures products. And like basically all you have to do right now is listen to what Gary Gensler says, because what he says is what he does. Like everything else kind of like matters, but it's like it's moved down in the totem pole. And that's why we got it right that Bitcoin futures ETFs were going to be approved when they were approved, and most other people were incorrect, even though they told us we were going to be wrong. So that's when I got like all of my followings, because I was aggressive in saying we thought it was going to get approved, and that's when most people followed me. But all of this hinges on the fact that Bitcoin futures ETFs were approved. There's a non-0% chance that Gensler could go back and say, all right, then we're just going to delist Bitcoin futures ETFs, which then would open another APA violation and lawsuit and go in the courts, because the issuers are like, you can't just approve and then disapprove. But there's some talk of that happening. I don't think it's going to happen, but that's another outcome there. Like I said, I think the most common outcome is the judges say, you violated the APA, go back to the drawing board, either approve or deny for a different reason, and then they're going to deny them, possibly because they've done all the stuff with custodians, regulated custodians. I think they might lean on that a little bit. I'm not really sure.
Okay, just say they do allow it through the judges. They are forced to allow this. How quickly can the GBTC trust become an ETF? And also, what positions does this put all the other applications in? The Valkyrie, the Winklevoss one? Because there's lots of applications, but really first to market is what you want.
Yeah, so that's a good question. We kind of have to get into the 33 Act versus the 40 Act to answer that question. So there was this new rule called the ETF rule filed in 2019. And basically, if you're a 1940 Act ETF, you file, and then after 75 days, you can launch. It basically makes launching an ETF easier. 1940 Act has additional protections. Basically, it was created afterwards with more protection. You need a board, you need XYZ. 1933 Act ETFs, which is what the gold ETFs are, what spot Bitcoin ETFs can only be, They don't have all the same stuff, but it's really just it's a very minute differences. Like for the most part, 99.9% of the time, it doesn't really make that much of a difference. But for futures ETFs, they can be either 40 Act or 33 Act. 33, you can use a little more leverage to be a little bit more efficient. But it's basically because treasuries can either be cash or a security as far as the SEC and regulation is work, because that's just, you can basically file it as either cash or as security. And if you file it as a security, then it's a diversified investment. So basically, if you use treasuries as your security, you can file as a 40 Act. That means 75 days after you file, unless the SEC comes in and says, withdraw, you can't do this, we won't allow it, you just launch. The other option, which is the only way to launch a spot Bitcoin ETF, which is the way that like all the gold ETFs, a lot of other ETFs are launched, is under the 33 Act. And they have to go through this process called the 19B4, which is where you see all those has been disapproved, which is whatever. So they go through this process, and it's like a 240-ish day process from filing, and they extend, whatever. So they either accept right away after 40, I don't know exactly what the days are, but it's 240 total, and there's like 5 steps in between or 4 steps in between. And they either extend or approve. And then at the end of 240, they either approve or deny, and then they deny. The only active application right now for spot Bitcoin ETF is ARK, Cathie Wood's ARK and 21 Shares, which launched a bunch of ETFs in Europe. So they have a ton of crypto ETFs across Europe, primarily in Switzerland. So they just filed not that long ago. So that's the only active spot Bitcoin application. There is a 33 Act ETF, which was critical in the lawsuit that Grayscale brought against the SEC. I don't know if I don't want to get too in the weeds here, but essentially the first spot Bitcoin ETFs were approved, and basically they leaned on the fact that it was a 40 Act product instead of a 33. But then there were already filings for a 33 Act Bitcoin futures ETF that came due in March of 2022. So the SEC basically was forced to approve that, because like, what were they going to say? Oh, one's a 40 Act, one's a 33 Act. So they approved the futures ETF under the 33 Act. Basically, it's all these issuers whittling away at all these different reasons for them denying. So Two Korean was the one that filed that, and they ended up selling it to a company called Hashdex, they're in the US, but primarily in Brazil. And they bought that ETF. So now there's a 33 Act Bitcoin futures ETF, DeFi. Theoretically, they could alter things, and if they allow for spot Bitcoin ETFs, that might be the first spot Bitcoin ETF, because it's already a 33 Act. And so that theoretically they could alter things in their prospectus. I'm not 100% certain of that, but I think they could alter it to buy spot Bitcoin. I don't know how long it would take. It could take months. It could take weeks. I would guess months if they get approved, and they can convert it to an ETF. Honestly, the best thing for everyone involved, in my opinion, would be for ETF approval. You don't want them forced liquidation, because then they're going to have to sell a ton of Bitcoin.
Nobody wants that.
You don't want them to stay where they are. ETF approval is best for everyone. Just Bitcoin holders directly, GBTC holders. It's just a more efficient vehicle for anyone who wants to trade these things. Right now, everyone's trading the Bitcoin futures ETFs if you want to trade on traditional financial markets. So yeah, the best situation would be for them to convert to an ETF, but I don't see it happening anytime soon.
But back to my point, though, you want to be the first ETF, right? Because that becomes the most liquid market.
For the most part. So we saw in Canada, one ETF launched one day before the others. Right, so this ETF launch, it's the Purpose BTCC launched in Canada. It launched literally one day before all the other ones. It's spot Bitcoin ETF up there, and it dwarfs everything else for the most part in trading volume. It dwarfs in assets, but there's a lot of assets to some other ones, but they don't trade anywhere near as much. So one day advantage is critical. We were of the opinion that you should just allow like a bunch of these to line up at the starting line and go at the same time, But that's not how the SEC works. They're not. I don't think they're going to do that.
How many ETFs, spot ETFs, do we know of for Bitcoin there are globally?
Spot?
I mean, just estimate. Are we talking like 5, 15?
No, more than that, 15, maybe more. But there's like 180 something crypto ETFs or ETPs, I'll call them. There's ETNs, ETCs. We don't have to get into nuances.
Fundamentally the same?
For the most part. They're technically a debt instrument, but a lot of them are spot backed, so they actually hold the assets. The difference is like some of the really cheap ones in Europe, the reason they're super cheap is because they lend them out. So like some of the reasons some of these are more expensive is because they're not lending out the underlying Bitcoin. So like if you're buying a super cheap ETF, they're probably lending out the underlying assets in some way and earning return on it. Now that's very common in the ETF world. So like I'm going to talk traditional finance a bit, but like you can basically get virtually free access to the US financial markets or any market using like a Vanguard ETF or iShares ETF, because what they do is like they charge 3 basis points, 0.03%. And then they'll also lend out the underlying. So they earn a little bit of return. So like basically your net expense, like they're taking this money, but they're also earning on lending out shares. And you end up paying virtually nothing, even less than what the expense ratio is many times because you're lending it out. But obviously we know the issues with lending out underlying crypto, Bitcoin, what have you. So some of these ETFs are doing that, but they're probably, I'm going to hope and assume they're doing it in a more efficient manner than some of these other guys we've seen.
But basically, US investors are being disadvantaged against other international
100%.
investors.
Yes, not even close.
Yeah.
Not up for an argument.
Yeah, bad. Okay, interesting. Huh. Okay, so when's the lawsuit being heard? You said there's oral arguments. When do we expect a decision by?
So now we'll expect a decision. The rough estimate is towards the end of 2Q and into 3Q, which is before the end of June is possible. It's likely going to be a 3Q decision. So July, August, September, somewhere in that time range. There's no like this many days until the judges issue a statement, right? There's no guarantee, but it's my guess would be sometime in the third quarter. So summer.
These markets are very heavily regulated. Are they over-regulated?
Which markets?
All of everything. The CFTC, the SEC.
That's a real nuanced question. So we can get this is a good thing to ask. The SEC, which people have probably said, some regulators are merit regulators. Is there merit behind this investment? The SEC is not a merit regulator, which, to be honest, that's what they're doing with Bitcoin, right? They're saying there is no merit to this investment, in my opinion. A lot of their decisions, why they didn't deny it. What the SEC is a disclosure regulator. They're supposed to say, disclose everything to us, which is what all these companies do. And when you don't disclose everything, it's securities fraud. So like, there's I'm blanking on his name, but there's a columnist in Bloomberg, and he says everything is securities fraud. Like if you do one thing and it's said differently in your documents, you committed securities fraud. So basically, that's what the SEC does. They can go over anyone. Basically, if you lie and do something different with whatever however you're operating, right? So their whole goal is like disclose all the risks, disclose everything you're doing, and we'll be good, which is what they should be doing. If everyone knows the risk at this point of what Bitcoin is, like this isn't 2015 anymore. Like people understand what it is. I mean, little side note, the Winklevoss tried to launch an ETF back in 2013 when Bitcoin was $100. Like this has been going on. This list is every ETF that has been filed in the US.
Holy shit. What was there, like 50 on here?
No, 79.
79?
And I'm probably missing some. And one of those was filed today. But you asked about the first to market thing. If you look at the bottom, see all the dates on the filing for all those Ethereum futures ETFs?
Yeah.
Grayscale filed for those 3 ETFs I mentioned, and the next day 3 issuers filed, and then your buddy Steve at Valkyrie filed also a couple days later because they don't want to be late, right? Like even if it's likely or potentially likely that the SEC is going to not allow them to launch these, but in the off chance that they do allow it, you can't be 75 days behind. You have to just file and go for it, right? Like you can't let somebody else launch and beat you to market by 70 plus days.
BlockFi applied.
Did they?
I didn't even know about that.
Yep, they did.
All right. Anything I've not asked you with regards to these ETFs that we should have covered?
Not really.
Two other things I want to ask you about then. Do you know anything about the Coinbase action with the SEC?
I do. I'm not an expert in that. So I don't actually know.
All right, we won't cover that then. So last thing I wanted to talk to you about is of all the companies out there reporting on Bitcoin, and I know you say crypto, Bloomberg's all right.
Yeah,
Bloomberg's pretty fair.
Yeah, so we this is a little background. So like I said, I started covering this. Actually, I'm going to give you my first foray into crypto, into Bitcoin specifically, Bitcoin mining. I was a freshman at the College of New Jersey, and I had a roommate, and then I had 4 suite mates. So they each had their own roommate. One of my suite mates, Mike H, I won't say his last name, came over in the spring of my freshman semester. Was like, you got to check this out. And he showed me Silk Road, and he's like, I'm mining this coin, like, and we can use it to buy things. And sure enough, like he downloads the software onto my computer, And so like I was mining Bitcoin technically in I didn't even understand what it was. And until 2016, I still didn't, like when I read Kathy Wood's white paper, she wrote a white paper on Bitcoin, like explaining the whatever. That's when I really started digging in, and I was like, oh my God, I used to mine this stuff, but it blew up my computer. So like I literally had like a 12-page paper that I had written, and my computer blew up. And I don't know for certain that it was the Bitcoin mining that was on my shitty laptop in 2011, but I'm pretty sure that that's what did it. So, but Mike, I reached out to him in 2017 on LinkedIn, and I was like, dude, do you still hold the Bitcoin you were mining? And he never responded, and then deleted. I can't find any trace of him anywhere on the internet. So he's either completely changed his name or is like a Bitcoin millionaire somewhere. I don't know. Mike H, if you're listening to this, James, I would love to talk to you still.
Mike H, get in touch.
Yeah.
That's wild. I guess you didn't save any of your Bitcoin.
I mean, a computer blew up.
Dude, you were doing getting 50 Bitcoin a block back then.
Yeah. I have no idea. He just downloaded. He was like, I was like, yeah, you can use my computer, just like whatever. I didn't even want it. I was like, you can use it and keep it for yourself.
God damn it.
And then in 2016, I got involved, really did diving in. And that's when I first got into Bitcoin. It was actually like a traditional financial investment process. And Kathy Wood was up there talking about the benefits of Bitcoin back then. And I was like, okay, this is actually pretty interesting.
But Bloomberg's pretty good. Like we get so fed up of all these different.
But this is what I was saying. Yeah. We weren't good. We didn't used to be good. So when we were covering it, we were dealing with news people that from the TradFi, traditional finance world, that like saw this as magic internet money. It's BS. Like I heard you saying you were like, you talk to people and like inflation, and then you say you should buy this magic internet money. That like people just thought we were insane, even writing any research on it. But you were like, wait, why are you doing this? But they hired a ton of people from different industries and different areas that were covering crypto. So we vastly expanded our crypto coverage in 2020 during the pandemic, during the heart of the pandemic. So they hired people who had traditional understanding of crypto and Bitcoin, and that's why we got really good. But like back in 2017, when we were trying to get information on the terminal, we had a lot of clients that were like, we're interested in this. We wanted more data so we could write research better. And like, we just got stonewalled. We were hitting the ceiling. Like no one's like, yeah, no resources. We're not doing this. We'll do the bare minimum. So they got pricing. There was some good stuff on there. And then everything kind of changed in 2020. They were like, I think they saw how much value it is in covering this market because how many people care about it. Like it's irrespective of whether they think there's merit to it. They just know that people care about it and they want to understand what's going on. So they're investing money.
So they're pro-accurate information.
Correct.
Yeah.
Yeah.
Yeah. No, I like Bloomberg. I've got to say, I mean, I can't remember you being shit at it, but all I know is recently, anything I've read on Bloomberg, I'm usually like, yeah, well, this is fair.
Yeah.
Yeah. Good work, man.
I'm happy to hear that.
Well, James, look, great to meet you. If you got anything you wanted to ask, Danny?
No, I think we covered it.
That was brilliant, man. That was genuinely brilliant. Well done. That was amazing. I hope we can do this again sometime.
Yeah, I would love to. Maybe when we get an ETF.
Yeah, let me know, man. Are you in Miami all week?
I'm here through Friday morning, yeah.
Nice one,
I'll be at the conference on Thursday.
Well, listen, stay in touch. And you're usually in New York?
I'm based in New Jersey. I'm in New York like once a week, every other week.
It's just over a bridge, right?
Yeah. So we actually have an office in Princeton, New Jersey.
Right. Okay.
So I'm based there. It's much easier to go down there than to go all the way into New York. But yeah.
Right. I'm sure we'll do this again. But thank you for coming on.
Yeah. Thanks for having me. This was awesome. Long time listener, first time caller.
Thank you, man. Well, I appreciate that. Thank you.